Hey guys.
Hello, hello, hello.
Well, happy Monday.
Yes, indeed. Happy Monday it is. I hope everybody had a refreshing weekend.
Quick. Went
Yes,
by
there was
quick.
always too quick, always too quick.
All right. Hey, we got a disclaimer here, Jamie. You want to hit this?
Oh, well, Steve, I know how much you love reading the disclaimer, so I would not want to take that away from you.
I don't read. I it's trade ideas as a publisher, and you guys realize that this is all good, really cool, awesome content being thrown at you as a publisher of content. It's not to be considered as investment advice. We're not registered investors. They'd probably kick us out. But if you need registered investment advice, seek an RIA or a broker and let them put you into some passive index funds. And so that's that out of the way.
And
What are we
Steve,
going to do today?
a long time ago, I did used to be the guy that had all the license, but that's not
Mm-hmm.
where the fun is. The fun is in trading,
No,
so
no
I
fun
like
at
having
all.
more fun, so that's why I, hop the
Mm-hmm.
fence on the trading side.
So what should we talk about today?
Well, funny you should ask that, Steve, because I think we should continue to talk about things that work. How's that sound?
That works.
All right. I thought it would. I thought it would. We are going to talk about what has been working, and we will continue to talk about what is working until it no longer works. And the only thing that will really impact that is market direction. And thus far, as you're going to see from Steve's market recap, that hasn't changed a whole lot. We're still kind of coiling, flatlining here, leading into the fall. And what
Before,
is notoriously known as the deader part of the market these last 2 weeks of August.
yeah, what I was going to say on the heels of the theme of what's working and what continues to work and focus on what will work. The only constant, the only guaranteed thing is that at some point this will stop working. So the idea is to milk it for all it's worth while it works and then recognize when it stops working. And we'll get a little bit more definitive of what we're talking about here, tongue-in-cheek going forward. So we'll do what we always do. Talk a little bit about the past performance in our market, past performance in Holly, which is a quick snapshot here of Holly, just reminding the bearings to get set here. This was the Brexit, Britain exit from the European Union, and the volatility doesn't look so bad in hindsight, but at the time it seemed pretty dire. Holly said, I don't play volatility, I need statistical probabilities, and this was not one of them. And then again, continued new strategies coming in with continued new risk management confines have done a great job of helping Holly learn and get better on the performance chart. And real quick, today was a classic risk off day. Some days are going to be very easy to define. Well, what's risk on and what's risk off, and how do we know? Other days are going to be a bit more nebulous to define and may even switch back and forth a few times. But for those that don't know, when we use the terminology risk on, risk off, it's primarily having to do with the AI. And the AI has a strategy for entering, which is what we all follow. That's our one universal cue, is the value of the idea generating in real time, the price and the strategy, the direction. But Holly will always have a time frame on there, hold for 30 minutes, hold for 45, 60, or maybe longer. And Holly will always adhere to those exits unless something happens first, like a stop out or a profit save, which is another word for the trailing stop, or any other risk management parameters. But if it goes the full distance and it's a timed stop, that's pretty much considered risk off. AI, time stop, trade closed, Holly's closed, risk off. But the trade still remains open for anybody that wants it. We just need to define when is the best optimum time to continue with risk on and risk off. Well, I'm showing you this slide here because this is a copy of a Friday, coming into a bit of a gap down today, then going back to positive, back negative, back to positive, back through negative, narrowing range, side by side. This is about as risk off as it gets. So it's no surprise today that Jamie's going to show you that Holly had a better day in the risk-off mode, identifying a great signal on the timing, taking the entry, and then using the optimized exit. But on a day that it's not risk off like this, let's say we did break through highs and kind of congeal here sideways and then just a slow trend up, and everybody on CNBC is all of a sudden talking about a broad-based rally where there's not a single red sector to be found. Well, broad-based rally, trending, staying green, going green, staying, that's risk-on type stuff. So the more that we can try to help ourselves identify what a risk-off type day would be versus a risk-on day, I felt this slide was a great example of risk-off. A lot of head fakes, a lot of back and forth, going green to red many times throughout the day, not your typical broad-based rally. And that's that for the slides. Anything you want to add to the risk-off stuff there, Jamie?
Nope, you summed it up, encapsulated it pretty well. What I've been trying to kind of convey in previous webinars on the risk-on, risk-off topic is approaching it, from a trade-by-trade basis as well. We probably won't have a whole lot of examples of that today. But yeah, I agree with what you said on the risk-off, risk-on. It takes a little bit of getting used to, and since that's a relatively new feature that we've added to Holly not too long ago, we've been getting used to it ourselves as well. But it's certainly turning out to be quite a useful little feature.
And of course, we do our best to try and highlight what's working best at the moment on the risk-on, risk-off feature. You can see here, risk-on today was the way to go. Quick takes, bird in the hands, worth two in the fist, versus try to stick around and see if this choppy market would have done anything. So I'll save the rest for that for Jamie. I want to quickly do what we like to do is a look back on the S&P. We hit this a few times a week. We have not changed these price levels for many weeks now as we've moved through them. Again, here was the Brexit, holding a beach ball underwater and letting it go. So these 3 days right here would be considered risk-on, broad-based rally, moving from lows to highs all day long. So rehashing, this range was our range last month, and we had a couple of head fakes to the downside to try and see if we could get some follow-through for the bears, which never occurred because they showed their hands that particular day. There was no close below those orange lines. We're allowed to trade below those orange lines, hold our breath and see what's going on, but it really does come down to where the price closes as to what that candle's meaning actually is. So 1, 2, 3 days here in a row where the bears tried to close us below that line, but the bulls are too strong. The beach ball underwater continues to want to push back up. I mean, again, look at all these days back here where we have some stick saves at the end of the close. Buyers come back in and push us to the higher end of our range. For the most part, except for this one day, God forbid, we got a little bit ahead of ourselves here, so we had to pull the reins back in, which is just par for the course on this ridiculous long range that we've now found ourselves in, secondary to this long range that eventually worked itself out. So, the path of least resistance is still higher, judged by a few things. Continuation patterns like this continue to move forward. A continuation pattern argument could be made here to continue to push forward. It's just, are we going to get that continuation pattern push forward with enough steam and catalyst and momentum in the second week, third, fourth week now of August here? Pretty much all of Europe and a lot of the country and the globe is on vacation in August. This is typical price action for August. So we may be looking at more of the same until we get into Labor Day. And then even then, Labor Day, you've got people coming back, the big guys coming back to their desk, the big money managers. It's going to take them a few days to settle down and get the Hamptons out of their pores and read their emails, read some blogs, and get their hands on where they are. So, I mean, there's no guarantee that life's going to come back to this market on Tuesday after Labor Day. It's going to take a few more days after that. Then typically we start to get a lot of September and October volatility. So until then, we have the bias moving up because we just can't seem to get the price action to close down below this orange bar, which is 217.50-ish. So we just continue to go sideways until then. So that's where we are. We may see a lot more of the same here for a week on end like this. Unless some black swan comes out, we do have the elections. Things could start to get heated up really interestingly. But I see a candle like this that kicks the ball back into play. On 2 days prior, I see a candle like this that kicks the ball from above back down into play. So that's the powers that be right now. We're just forcing us into this tight range. I think I calculated it's about a 2.5 point SPY range. It's a very, very tiny range, 1% range, so to speak, for the bigger picture. All right, Jamie, that's where we are, and that's what I got for the bigger picture. What do you want to talk about, or just send it over to you?
Well, I guess we should probably go into what Holly did do today. I was just clicking on a couple of charts over here, and I hope
I'm really hoping that's real. Let's take a look. XLF, trade of the week. It's been going sideways, speaking of going sideways, for 2 weeks now. XLF, trade of the week. But for some reason it just triggered, makes me wonder if I should be looking at post-market. Yeah, there's a little tiny tick higher. So getting a little tick higher in the market on the financials. Would not be surprised to see XLF maybe even make a move tomorrow. So just so you guys saw that in real time, the price alerts, they do pop up in real time. And this is a great moment to quickly show trend change lubricant, trend change lubricant, trend change lubricant. 4 out of the top 6 strategies are still performing under the trend change lubricant that we're going to talk about going forward. So this is the theme that we were talking about. What's working? Is it still working? And why deviate from what's working? So we're going to continue to focus on that strategy going forward. But for now, yeah, let's turn it back over to Jamie. So let me get you presenting there, Jamie.
Well, thank you very much.
Control. There you go.
All right, just let me know when you have eyes on.
I see it. AMWD.
Right. Perfect. Okay, so before we get into the actual trades here, let's just take a look at the strategy grid, which, Holly started the session with 8 strategies we can see right here, 3 of which were short, or excuse me, not 8, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, my eyes are playing tricks on me. All right, 3 of which were short, and we can see that not all of them fired. So I'm going to resort just by the trades today. And of course, those of you who attend the webinars and are already Holly subscribers know that just because a strategy shows up for the day doesn't necessarily mean it's going to get any play time. It might sit on the bench all day like these bottom 3 did. Bottom line is, once Holly gets done with configuring these base strategies, they're very complex on the filter set side. So, things have to be very specific in order for that statistical probability to be triggered. So these guys down here, no trades for those guys today, no playtime, coach kept them benched. These are the guys that did manage to issue some trades today. And when I see this type of distribution, it makes me smile because that's what we always hope for. Of course, we are going to have some days which are going to be pretty in sync with the market. Steve, you might recall, when we were back, coming out of this area here, those are the days where we might have a strategy that, did a lot of the trading for the day. But since we're up here in this little no man's land, this little base that we're building here, we're starting to see a lot more evenly distributed days, which makes a lot of sense from a statistical standpoint. Of course, that could all change at a heartbeat once we get some action up here, but more of the same for now. Same chart, same type of nice distribution on the trades and the number of strategies issuing them. So what do we have? 3, 3, 2, 2, and 2. If we sort by how the strategy did today, we can see by percentage basis the bullish trend change definitely happens to be the shining star today. That also coincides with the risk-off profit, accounting for 64 cents out of the total that she was up today of 85 cents. So typically what we do is we'll have a lot of trade arounds, which is sometimes Holly's just off on the timing because the statistical probability is pretty much good for the day in the same price action, but sometimes the timing's off and she might get stopped out a little bit. And what we typically look for in that type of scenario is if she does get stopped out, we'll draw a line across from the original entry price. So for example, had CRTO been a viable trade around, once she gets stopped out in that bar, we would have drawn a line straight across, which would have been up here for a potential second entry. Of course, we can see that that never occurred today. So typically what we'll see on the columns here is a stop out, but then finish the day. Yeah, these were stop outs here. We can see the stop was hit. But then on the risk on column, we would see a green value. That always indicates, in hindsight, a good trade around, whether it crosses through that line or not. And we can see, a very small one here in the CAPL, but not a huge move one way or the other. We're talking about the difference of 13 cents there. Now, technically, it is a trade around, but not a lot of meat on that bone today. So when Holly has a risk off day like she did today, and once again, Steve already kind of went back and forth between the chart here, but we can see a nice run in the early session. But then if you didn't take the cookies, or didn't start, applying your stop losses and profit targets and all that good stuff, we did have a maximum of a little over, not quite $1.70 in profits. Of course, we're never, just like an individual trade, we're never going to sell the top. We're never going to buy the bottom on a short. Every once in a while, yeah, that will happen. But, as a rule of thumb, not going to be everyday type performance. So, after everything was said and done, Holly nets out 85 cents on a total of, what do we got, 5, 7, 9, and 12 trades. Not the biggest day, but, just to reiterate the type of day that it was, Steve was showing a 15-minute candle earlier. Here's the 5-minute candle. I mean, talk about a roller coaster ride, or what we traders like to call a seesaw with razor blades on it. Coming out on the risk-off mode of 85 cents on that small amount of trades, we'll take that. And any trader would more than likely be happy with that type of performance on a day like today. I mean, because talk about schizophrenic market today sums it up pretty perfectly. Now, let's take a look. If we just sort the risk off column by winners and losers, winners at the top and the losers at the bottom, we can see that there was a little bit of opportunity in the Eldos trade today. I mean, when we look at the entry right here, I've taken the liberty of already drawing a line straight across. So Holly recommends Eldos long here. And then, of course, right after that, we get the little micro consolidation and the higher push. So a really beautiful trade there. And we can see, even if we had held the trade till the end of the day, not that much more meat on the bone, especially when there was lots of peril in that market that looks like the razor blade, the seesaw with the razor blades on it. Now, AMWD, now Steve, correct me if I'm wrong, but I'm looking at the time over here. Was that trade, is that lining up properly? Is that the wrong time?
No, that should be the right time. It took you see the arrow, and you see it was later in the day. I watched that one.
Right.
It's one of the quarterbacks, and it had a really nice push. Had a good entry and a really nice secondary push. And then if you look, it took the profit save mode because
right. Profit save. Yes.
It had enough profit built into it that the new risk management algorithm is not going to allow a decent profit trade that's green to turn around and go red anymore. One of the bigger new things that were put into the repertoire of the risk management. So that's why on the risk off mode you see it was a complete reversal. Holly did the right thing by using the trailing stop. It just did not work out.
And that's I mean, once again, I smile when I see this type of action because, the profit save is a relatively new addition, and as always, we're going to keep coming out with these new additions and continuing to improve Holly's performance. So yeah, great exit for Holly right here, 42 cents. Had she held it, even, since this came out 45 or so minutes before the close, 47 minutes before the close, on a relatively short hold time, being able to clip out an extra 42 cents and avoid that profit turning into a loss. Boom, we love to see that. Other than that, We did
Ahmed.
have Alpha Predator. Alpha Predator is always making the cut here lately, just because that's such a strong filter set, and always manages to produce a few trades on the day. That one only came in at 66.7. And it's the stocks that it's producing are a little bit more on the volatile side. So it is nice to see that, on 3 trades, it, a little bit better than flat, clipped out 9 cents versus, on a risk on day, losing a $1.05. 32 cents out of AMPH, basically right here. And once again, Steve, this pattern is always repeating itself on these Holly entries. How many times do we look at a Holly entry and we see this little kind of action right before she says go?
Perfect. That's what we
Once
see.
again, there we see it again. She says go, gets a little bit out of it, and especially on a day like today, where we had that vacillation in the SPY and going up, going down, going up, going down. All in all, to see Holly, kicking out these types of numbers on a day where we had some not crazy volatility, but from the tops here, we're looking at what, 218.73 down to not quite a point on the SPY, but in a relatively short amount of time. Looks like it was taking the elevator up, getting bored, taking the elevator down. We usually say they march up on the staircase and take the elevator down, but we could call today elevator action day for the SPY. So,
Ahmed was an interesting one we talked about earlier too.
yes, indeed, and I believe, see, I was getting AMED mixed up with AMWD, all right, because this is the one we were discussing earlier, and of course my dyslexic mind was like, now this isn't the chart, so okay, AMED, very interesting, because what Steve is talking about right here is Holly on a risk off took her 13 cents, but there was a little bit more meat left on that bone to the tune of 57 cents extra. So as we always talk about on the trader rounds, this one did not get stopped out, but we can see right here, and I've taken the liberty of drawing a line across from the entry price as well. 47.11 was the entry price. Once again, Steve, here's that same little sideways action. Holly says go when the candle gets big enough, and then whoosh, right up to the top. So plenty of opportunity to exit for a profit. And then, of course, this is probably coinciding with the SPY cycling down when we see it take a little thing. But the interesting thing to point out is look right where it found support, right in the neighborhood of the Holly buy signal.
The initial call.
I love seeing that as well. So once again, it comes down, it finds a little home right here, right where our AI called the entry price. Very powerful. It creeps back up through that line there, never throws a wiggle of any significance. So you do have a second entry presented itself on this AMED today. So there is some hidden alpha that we can't see in our readouts here.
And there's another story on this stock. It closed on highs, and so when these stocks are closing on highs, you got to ask yourself, what's the bigger picture? Well, this one, for interestingly enough, is called bullish trend change. Well, it's looking to me very similar to a lot of the bullish engulfing alerts that I usually show up on some of my scans. That right there could be the beginning of a multi-day reversal. That engulfing pattern is the typical type of candle pattern there called the engulfing, and there could be some follow through on that candle tomorrow and the next day. So not everybody, but we hear it a lot. Well, this AI thing looks like it's only for day trading, and I just don't have the temperament for day trading. Well, this AMED just may have spit out something that could be interesting for a multi-day swing hold. Makes a lot of sense there at that level of support, looking at that daily chart with a nice engulfing pattern that Holly brought to our attention with an intraday trade, but closing on highs, there could be more meat on that bone. Or if you just are the type of person that just says, I'll sell half and let the other half go, that's the easiest way to play, those types of things as to what happens if I don't sell the whole thing.
Right, Steve, I was just looking at the question panel here, and one of the questions was, when a trade is working, why does Holly exit with a time stop? And the quick answer is that all of the strategies, well, let me get this chart out of the way. The strategies that show up in the window here each and every day, they're all geared towards intraday hold times, because the entry obviously is very crucial. We want to make a good entry. Some would argue it's the most important part of the equation, but some would argue that the exit is more important. But we're not going to worry about assigning value to the entry or the exit. We're just going to talk about the entry for what it is, the first half of the equation. Now, if Holly gives you a good intraday signal and you like it on the intraday and you're taking that trade with her or just observing, and it goes. Something very similar to the AMID here. All right. Now, in order to discern whether it is a good candidate for a multi-day or swing type trade, Steve, what do? We consult the daily candles to look for the support and the resistance. So you see, any trade that Holly produces has intraday potential. We just have to be able to read the charts and figure out, what might happen based on prior support and resistance. So the reason, number one, the reason that we make Holly have intraday trades is because she has to close all of her positions before the day is through. So she has to be accountable, and that's how we measure her progress against the S&P. So I hope that answers the question.
For some reason, the column for Holly's exit price is not showing up there. It's either on the slider bar or it needed to be added. Somebody was asking about that.
Oh, my exit price. Yeah, that seems to be plaguing me here lately. Let me just add that column.
Go to the columns menu and locate it on the right-hand side. And exit price, there it is, midway up.
There we go. We'll push it over. Okay. So, is it still hiding, or did it? There we go, right there. Exit price. Okay, so I hope that answers the question about, well, Holly's just spitting out intraday. No, she's not. She's geared towards intraday, but all we have to do is look at the second half of the equation, which is the exit, consult those daily bars to figure out if it's a good multi-day hold. Now, I'm glad that came up, because that's a very good segue into the next topic here, and that is identifying things on the daily chart that have the potential of working out nicely. And for those of you who are regular attendees, hopefully you've made some money off of the price alerts that Steve and I set for you last Monday. So let me just pull these guys over here. Now, those of you who are already subscribers know what we're looking at here. We're looking at the price alert window. And these are the alerts. We can see the created date. These were all created during the Monday webinar last week, all created on 8/15. All of them have triggered except 3. 3 are still working, as we can see right here. These are all triggered, and they are up a total of 4.27 points since we gave them all out last Monday. So those of you who actually capitalized on these trades, congratulations. We're going to hand out some more at the end of this webinar.
I'm sure you're going to get to it, but just under the notes category, we've been trying to be very diligent in our notes, and we'll even add a step to our notes today. But what looks interesting in there is the same strategy is working on his alerts that is working on my alerts as well. Some of them are the same, some of them are my own. But we've been focusing on this trend change lubricant, looking for pivot points where we can identify a level that short sellers are going to get spooked. So the shorter the float and the bigger the high float percentage and the more definitive the pivot level, the better the setups. So the big takeaway is here, this is the strategy that is working, and we will continue to work it until it is no longer working. So that's what we're about to do here.
Right, and so just to verbalize what TLC stands for, trend change lubricant. Now, where are we getting these symbols? Of course, this kind of circles back around to the methodology that we so frequently talk about here, which is the Holly Trinity. First off, we have to be alerted to things that are interesting, or what we perceive to be interesting, and we get the alert through either a top list window or an alert window or Holly. Holly is simply another high quality information stream coming at you. So whether it's Holly, the alert window, or the top list window, we get the information from here. Then what do? We consult the footprints in the sand, which are the charts, our intraday of our preference, 5, 10, 15, whatever, along with our daily. Now, this window here is looking at the daily patterns, and what it's showing us are things that have been beaten down in their daily charts that are starting to rebound. So before we get on to the new plays that Steve and I have been drumming up for you guys, in keeping with tradition, 4.27 points off of 1, 2, 3, 4, 5, 6. 6 positions. And we can see the bigger winners are the RH. Now, before we go into the new stuff, this is a very good example. Hey, let's see one that we actually show you that bops around for a couple of days with plenty of time for anybody to make an entry. And then what does it look like once it works? Well, if we were traveling back in time to last Monday, which was the 15th, we were telling you about it on this day right here. I'll just put a little arrow. So here's Steve and Jamie showing you this pattern last Monday, and basically drawing a line straight across from this resistance area right here, formed by this topping wick that kind of grazes these guys as well, and saying, look, this thing, RH, it's setting up nicely. It's got, at that point in time, 32.5% of the float was short. That's what the SF means. So, this one may jiggle around here a little bit, but once it pops through here, it might be time to go. So, what we also like to point out about these plays is your risk is clearly defined. Whether you're going here or down here, we could draw a bunch of different lines down here for what we thought the support was in case we were wrong, right, for our stop losses. So, we can go ahead and get in the thing and just hope that we don't get stopped out, or we can wait for the break. In this case, it was a gap up, so you already had to be in it to take advantage of that gap up there. Now, the next one, a washout candle that Steve identified with one of his scans. This was the
That was a washout candle. See,
that was the close.
Yeah, look at the notes on Jamie's thing there. We know that this is a strategy. It's a new one we're talking about, the washout candle. And the washout candle, if you saw me back test it, seems to have a great 3 to 4 days after that candle moving in the same direction. And this one just showing more the same. Let's go off track real quick. Show TCP. This was a candle I showed last week, and it's been performing perfectly on the washout bounce. TCB, excuse me.
That's what I thought.
Thank you.
There we go.
There's the identified candle, that washout bounce candle, and the back test, once again showing, in this particular case, just a nice gravitational push higher for the course of a few days. So for people who've been looking for slow trading, swing trading, this has been a decent strategy. So don't want to get too far off topic here, but that was the particular strategy that we identified in our notes, so we know what strategies are working, and I'll let Jamie get back to calling out the ones from last week.
Okay, so no point in going through all of these. I just kind of wanted to give people, for the new people today that aren't necessarily used to seeing this type of activity, what do they look like? If we zoom the chart in, we can clearly see, stock's been beaten down, starting to curl back up or form that little base camp, and this is what we look for. Are these breaks here? And once again, this is one from last week, LE, right? So in keeping with tradition, what I like to do, start fresh every Monday. I'm going to delete all of these. Boom. Thank you very much for your 4 points.
All right, let's set some more.
We've got some new ones which we will distribute via Cloud Link before the webinar is up. So, moving right along here, this is the window that we've been using to find these types of plays. And I guess PMTS is as good a place as any to start, Steve. All right. Steve, would you like to give the details here, or would you like me to?
PMTS, and we pull it up on mine too. It actually tested today. It tried to break today and kind of dipped its feet in cold water and retraced. So really the only thing that we can do here is see if it's able to regather steam and take out again today's wick. If it takes out again today's wick, I'd like to know about it. The decent short float on this one is 21%. This particular strategy, the short float or the trend change lubricant, has a minimum strategy of 15% short the float. So we try to find things with at least 15% or greater. When you start getting into 30 to 40%, that's really nice. But the only downside on this one, it's a very nice defined look, like it tried to break out today, but it got squashed back a little bit. Let's just keep an eye on it and see if we can regroup. Could be interesting.
All right, so we're going to set that one for a price $5.21.
All right.
All right. Next on the list, PRAA.
Okay. This one very similar to the last one that we just had because it tried to get ahead of itself today and couldn't. So if it's able to regroup and get back above that wick, I think it's worth noting that the second chance could be the charm.
Okay, so let's use 30. I believe that was 30.09. Yes, it is. 30.09 long course. The rational Jamie telling the future Jamie in the trading session to be calm, that this is being spawned by trend change lubricant on the daily candle.
Do we have stops and profit targets on these to close them out? No, we don't. We're doing kind of like what Holly does for everybody else. We're giving idea generations. The exits really are up to you guys. There's no one right way to do it or one wrong way. And also, real quickly, what is a float? It's worth showing. Jamie, if you can just highlight your float column real quick on the trend change. There's share. That top one, 10.2.3, that's a very, very low float. Anything above 20 million shares of certificates is a low float. Float means how many certificates of stock were actually created and put into the ecosystem. So when you have the stocks that have high short float percentage, meaning most of the people holding them are short sellers, and you don't have that many shares in the entire float ecosystem to start with, that's the real recipe for a nice tinderbox short squeeze. Stocks like Intel have over 1 billion shares. No comparison. But every now and then you'll find some of these stocks that have a bonus of not only having a high short float percentage of 30, 40, 50%, but doing that on a size of 11 million shares like Call or 10 million shares on that LE. Those are the ones that really get interesting. Look at that 4 million shares on AQXP. Those are the extremely low floaters that you hear us talk about. So hope that answered your question. Who's next?
Right, Steve. And hey, speak of the devil, because AQXP is one of our setups, I believe. Let me zoom back out here. Okay, so we can see.
Yeah, it clearly is.
See the chain here. And let me just kind of.
Not a whole lot of shares at 5 million in the float, 4.6. And a good 18% of those are short sellers. So we have a nice little triple top there that Jamie has so easily, elementarily identified. That's going to be our trigger point that we'll set, and we'll just remind ourselves trend change lubricant with might even be worth reminding ourselves low float and high short. Yeah, 4.4. Yeah, it's definitely worth noting because that's something that we should know at decision-making time. By the way, on those on those washout bounces that I just set out a minute ago, and if anybody didn't get it, I'll copy the cloud again for the washout bounce, and I will put this in the chat window. just so you know how I use it, I like to really use it at the end of the day, in the last 15 minutes, and see which ones are closing near highs, because some of them might fall back down in the mid-range, and at the end of the day, that's not what we want. The real crucial decision-making time on those washout bounces comes at the close, because on that example TCB that I showed earlier, if you wait and hesitate, wait for the very next day, that sucker might gap up on you, then you don't want to chase it. In my world, that candle, that washout candle, gives me all the confidence I need to know that taking something home overnight after a candle like that is not as dangerous as it normally could be. So I like to take those stocks home at the end of the day, run a history on that particular alert and see which ones with the longer tail, the better. The ones that didn't gap down very far, that traded all the way down and all the way back up, those are the ones I really like.
Yes, indeed. And Steve, for those people who might not be real familiar with like candlestick patterns and stuff, what is that wick actually? Why is that wick there? What does that mean?
It's there to show because the top part of the candle is where the first trade occurred. That's the top end of the green candle. The top end of the body is always where the trade opened. The trade actually ticked all the way down intraday to those levels way down low, but then recovered and popped back up and then closed below where I'm sorry, it closed above where it opened, my bad. The green candle signifies that it closed higher than where it opened. But the close and the open are where the candle bodies come into shape. The extreme volatile reversal moves are where you get those wicks that they call them, like you'd have on a candle, or a tail. Some people would call that a bottoming tail.
Right, right. Perfecto. Okay, so we got 3 in the hopper currently. And I believe this one is fitting the pattern as well. Kona Grill.
Kona's got a little better short float at 28%. I like what it's doing there. It's kind of, cup and handling a little bit, shaping. It wants to make an assault on the high end of that red candle. And if it gets through the wick of that red candle, I'd like to know about it. Now, ideally, maybe it goes sideways another couple more days. Like we talked about earlier about how Holly sometimes comes out of a nice sideways consolidation. But if it doesn't, either way, we'd like to know because there is a pretty good short contingency float in there. And only 8 million.
Did you say the short float was?
28% and 8 million in shares. So only 8 million shares and a good 1/3 of them are being held by short sellers. If they know how to read charts and they see this price get back above that red candle wick, orange line, they better start making some decisions quickly because if they're wrong, it's going to be painful and it's going to turn into a short squeeze.
Okay, just making sure I got all my fields properly programmed. Okay, so we have Kona on there as well. 1, 2, 3, 4. And I believe next on the list will be DVAX.
DVAX.
Which, once again, way down here at the bottom.
It's had a couple good days of run. Had kind of a go, pause, go run there. A good candle, then a narrow candle, then a good candle. But yes, exactly. On that green candle, which we nudged right up to against today, I'd like to see if there's going to be any follow-through. It could easily wick through and then pull back and then try and go sideways again. But if there is any push to this, bigger float, you've got 36 million shares and only 18% of them are short. But stranger things, that's been a very long building base there, going sideways for a while. The last 3 days have been green, but not giant candles, just kind of a slow creep. So there could be some follow-through on DVAX.
All right, so unless you have any more on the trend change lubricant, then what we need to kind of talk about is, do we want to go ahead and keep an eye on this AMET as well? Do we want to go ahead and mark this one up for some entries?
Yeah, or? I'd say let's turn this one into like a bearish, a bullish engulfing. If it can follow through today's highs, there could be an all-day trade to be had there. We'll just name it our own call. We'll just call it the bullish engulfing, because you can see the low end of today took out the low bullish, the low candle yesterday, or the body, I should say, and the high end of today's body took out the high end of yesterday's body. That's called engulfing. Piercing is when you just kind of pierce into it but don't take out the high. Well, this thing is engulfing is stronger than piercing. And the way that daily chart looks and the way it's had a pretty nasty fall for many, many weeks, could be in for a 2 or 3 day dead cat bounce here.
Right. So depending on how that thing reacts tomorrow, if you see it at a good spot, market's conducive, risk is acceptable, might be one to keep your eyes on. I think that's 47.84, the top of that candle. All right. Yep.
Yes.
Okay.
I'm just double checking here to make sure I haven't missed anything. We got AQXP.
We do have that one.
Yes. Okay. I think we're good. Keep it simple. Nothing too special, but this is what's been working. Did we throw a washout bounce in there? We did, didn't we? Or did we not? No, we threw a bearish engulfing in there.
Yeah, we threw the bearish engulfing. No washouts today.
Let's throw a washout bounce in there just for fun. Okay?
Yeah, what do you got? What do you got?
The one that I've got is SAND. SAND is on a beautiful daily chart, moving higher. Hopefully that candle, after a couple of days of pullback and selling, was the washout that those people that bought 6-7 days ago were fearing that they'd get stopped out, and they did. And we're going to use this scenario to try and look for a stock building a higher low using a washout candle to build that higher low. So just go ahead and above today's high, mark it up, and it might trigger pretty early on the open tomorrow. I wouldn't be surprised. But we'll mark it up with a washout just to see how this thing performs as we come back to it next week.
Okay, 623, and there we go. So what do we have? 1, 2, 3, 4, 5, 6, 7. 7 to go. Okay.
Lucky number.
It is.
All right, well, that's all we have got. Scott, you want to come in? And while he comes in, I really want to remind people, if you're on the fence thinking about subscribing, we do not offer a free trial, but we have 4 quarterly open houses in the fall, and October is going to be our next one. But look, when you consider we have this promo code that Scott's going to show you, and 1 month's only $99 before the discount, you're going to immediately be able to sign up for a one-on-one session with myself, Jamie, or Andy. We can talk with you and find out what it is you're looking to get out of this product and get out of the market. And we can send you in the right direction and give you some great customized one-on-one time. This is wonderful feedback that we're constantly getting. So, you know, the best way to try this product is to take advantage of the promo code Scott's going to show you. Quickly sign up after a week or so of fiddling around, get a couple questions, and then sign up for a one-on-one session where it's just you and one of us for the full hour, and we can spend all the time with you and get you going in the right direction, because everybody's different. Some people look for different things, but it's a great way to spend some time and get you going in the right direction. So if you're on the fence, and you're a little bummed that we don't have a weekly, automatic free trial. We have those every quarter. The next one's coming up for a full week in October. But between now and then, what most people do is just take advantage of 1 month, use the discount code, spend 1 hour with us, and you will know in 30 days whether or not this is the right product for you. And I bet you'll think it is.
Yeah, so, what Steve said is 100% right. I mean, our $99 a month standard is really the trial account that we have. I mean, considering the fact that we take care of your exchange fees, all that, and provide an hour of training with any of the subscription plans, you're getting a lot, and 99 less the 10% off that code that you see on the screen right now gives you is a fantastic price for a trial for this kind of technology. So the trial that you see on this, the promo code that you see on the screen right there, Professor, all caps, it is case sensitive. We'll take 15% off of any of the premium plans or 10% off of any of the standard plans. And that is also accessible by downloading the handout in the handouts panel. If you click the plus by the handouts and download that PDF, you'll also get a page with that link and the code. Just go to trade-ideas.com/price. And I really do suggest getting on the $188 per month for the premium if you do want to try us out without being certain about how much you're into getting on board with Trade Ideas, and then upgrading as soon as you've taken the training and realized what a value this is to the $1888 per year, which saves you even more on top of that. The premium includes Holly, the AI, and odds maker backtesting tool, and the price alerts and some other goodies too. Again, there's no contract. It's automatically recurring. It's very simple to get set up. We have outstanding support. We have many webinars a week, and the trading room, which is fantastic. You can even attend the trading room without a Trade Ideas subscription. Just go to the link at the top of our homepage for the trading room, and it's open every market day, hosted by Barry Anderson, or if he's not available and on vacation or something, either Steve or Jamie or Andy or Dan or Brad step in. It's great. So go ahead and do that if you're not a subscriber. If you're already a subscriber and want to upgrade and are not certain about how to do that, just email info@trade-ideas.com. That'll help you out. Real easy, though. If you're on the $18.88 a month and want to get the yearly, just purchase the yearly and use the code. Pretty painless there. It overwrites the monthly subscription. If you're on the $99 a month, just purchase either the premium plans, use the 10% off discount. Again, it overwrites your previous subscription. If you're on the $8.88 per year and want to upgrade to one of the premiums, though, the best way to do that is to email info@trade-ideas.com and ask about how to do it, and they'll help you right out. Just switch you over. Thanks, Steve. Thanks, Jamie. Thanks, everyone. You can follow Steve at Today Trader. He posts a lot of stuff every day that's good. Also, Dan Merkin, Trade Ideas 1, and Jamie Hodge is QuantBot. Those are the Twitter accounts. Follow us on Facebook and like our account there, facebook.com/TradeIdeasPro, to stay up to date with the updates we post to Facebook. We sometimes post some unique items there. Phone number is always accessible during regular business hours in California to help out with subscription or account issues. Or you can email info@trade-ideas.com for any technical help that you need or help setting up the product. As soon as you subscribe, go to the support page and click on training. Pick your preferred date and time. We have a handy little interface for that. Jamie Hodge is J Hodge at Trade Ideas. Steve at Trade Ideas. Real easy to get a hold of them if you have a question directly for them. And thanks everyone for attending. The recording will be up later tonight or tomorrow. Thanks, Steve. Thanks, Jamie.
Thanks, everybody. Have a great rest of the week.
Yep.
Thank you.
Thanks, guys. Bye.